You might say, well, listen, I don't want to just put all my money into one basket. So let's give you a diversified portfolio, 300 Rand a month. We're going to put some money into the South African equity market. We're going to buy the Satrix Indy, top 25 industrial shares on South Africa, the best performing fund in South Africa. We're also going to put some money into the American market. DBX Tracker MSCI USA gives you access to the top 600 companies in America. So I'm just going to buy the whole top 600 companies in America and a little bit of each of those. That's the DBX Tracker. I'm going to buy a property ETF, PropTrack SAPY, it's a property index. And I'm also going to be cautious in case things go wrong. When the market went down 7% the last 2 weeks, inflation-linked bonds has carried on going up because inflation-linked bonds just go up with inflation rate. Inflation rate goes up 1% this month. The value of inflation-linked bonds goes up by 1%. So they're linked to inflation. So here I've got bonds, property, offshore equities, local equities, 300 Rand a month. After 3 years, 59,000 Rand. After 5 years, 123,000 Rand, and so on. So I can also run a portfolio of different types of asset classes. And as you get to understand the markets better and you come to more seminars, and we'll talk to you through all these, how you can manage your portfolios, that's all a unit trust does for you. And I'm not trying to be nasty about unit trust, but when you come to our portfolios, we'll show you that no unit trust giving you that performance over 5 years because the cost structures are just too high. So you can start running your own portfolios. Let's now start being serious and put 1,000 Rand a month away into those 4 different ETFs. And after 5 years, that's worth 400,000 Rand. And after 10 years, that'll be worth about, times, it'll go up by another sort of triple. And over 20 years, that's 1,000 Rand a month, 4,000 Rand a month will be worth in the region of about 10 million Rand. So all you've got to do is get used to the idea. And a lot of you are young. A lot of people tell you investing and saving is difficult. It isn't. If you can get used to the idea of putting 10% of your salary away when you're young, I'm not too sure about this bloke in front. He's not as old as I am, but I mean, but the rest of you are all babies, huh? Particularly the ladies. The ladies are all very young. Put the money away and just leave it there and let it grow for you. And ETFs are a fantastic mechanism for doing that because of the low risk, low costs. So let's say you now want to run your own portfolio, and I now want to spread my portfolio amongst different asset classes. So I want to be some money in South African equities, let's say 40%, 30% of my portfolio should be in foreign equities, and 30% I want to make sure that nothing goes wrong. These things just sit in income-bearing assets, not equities. So it adds up to 100%. And I now want to run a portfolio, and here's just an idea on a portfolio. So we'll put 30%, 40% into South African shares, Indy, financial index, the ERAFI overall, which is the top 40 index, fundamental index, USA, world, so 30% offshore, and 15% inflation-linked bonds and 15% in property shares. Over the last 3 years, this is up to middle of September, that portfolio went up 24% per annum. Now, I'm not giving you Rand numbers, I'm just giving you percentage numbers, and 21%, 22% over 5 years. Just to give you some indication, the unit trust industry, low equity funds, high equity funds and flexible funds, this is the average return in the unit trust industry. That's significantly higher, significantly higher. So when I say that the unit trust industry in South Africa is very expensive, it is. And so I'm not saying don't give your money to a unit trust manager. You can go and buy a balanced portfolio from wherever, but also just go and put some money into ETFs. And if you're not comfortable running your own portfolio, we have seminars where we teach you how to run your own portfolio. Just come to etfSA and ask us to give you some advice on running our portfolio. And we can then do that to you. And that sort of performance, 24% per annum means your money triples over 5 years and doubles over 3 years. So that's quite a nice return that you're getting. Just using nice, simple, exchange-traded funds, buying indices, what Mark said is the basis of investing. So starting off with the ground floor, but doing rather well.